Welcome back. Well, markets digesting quite a number of things, awaiting the Federal Reserve meeting minutes. For insight into the Fed's rate outlook, also geopolitical interactions, and a number of central bank decisions today, particularly in Asia Pacific. Jameel Ahmad, Chief Analyst at Online Trading Brokerage GTC, joins us for a preview of the economic week ahead. Thank you so much for your time, Jameel. Let's actually start off because monetary policy is always an interesting thing that markets are focused on with that expected minutes from the Fed. I think it is Wednesday or Thursday, if I'm not mistaken. I think Wednesday. And particularly considering that at the last meeting, the Fed decided to stand pat on rates.
Yeah, there's a big question mark, Snaffy, now on the Fed, and even over the Fed shoulders. I think the central bank itself doesn't quite know what it's going to do in 2025, and that's because you have the return of a very unpredictable president, and nobody knows what's going to happen next. I've always said that this is Make America Great version 2, but version 2 is like on steroids compared to version 1. And another metaphor is like the sequel to an action film. And it just happens to be that the sequel, which is what we're witnessing now, the action's coming thick and fast right at the beginning. It's been a very, let's say, unpredictable month already, but this is at the beginning of the new chapter. And of course, for the Fed, there's going to be looking at the situation like geopolitics. What could happen with the situation with Russia and Ukraine, where we might have some positive developments, to be fair to the president. But then with trade tariffs and that threat of tit for tat, trade war narrative and so forth, which is a big concern for the Fed. So the Fed might be looking at inflation, it might be looking at economic data, or it might just be looking at a very unpredictable environment and thinking that it can't really predict what it might stand 3 months from now and 6 months from now, which is why I think the Fed right now are somewhat non-committed and they don't want to commit in either direction. But considering they took a lot of action late 2024, we shouldn't forget that they cut interest rates 3 consecutive times. They've given themselves some breathing space now to leave policy unchanged, and let's see what happens with the inflation before we get to the rest of the action.
Listen, Jameel, in movie land, this would be a great sequel, but I'm not sure about the economic landscape at this point and, with the geopolitical tensions escalating. Just talking about central banks, there are a number of central banks that are coming out with the rates decisions. We're looking at the Reserve Bank of Australia, New Zealand, Indonesia. Anything standing out for you? I do know that in terms of a Bank of Australia, sometimes it has led some of the central banks to kind of mimic what they're doing.
Look, it's looking quite likely that Australia is going to at least signal more interest rate cuts. But I think if you're looking at that part of the world right now and where the interesting story is, it's actually going to be on Japan. Because of all of the developed central banks, you include the likes of Reserve Bank of New Zealand, Swiss National Bank, Australian Central Bank, European Central Bank, Bank of England, and of course, the US Federal Reserve. The Bank of Japan is standing on its own right now, where it's in a position to actually start raising interest rates. Considering that for most of us in our generation now, at least in Japan, have never seen high or even normal interest rate policy. So the fact that Japan's actually positioning itself to increase interest rates, that's going to attract a lot of attention towards the stock market, specifically the Japanese yen, which is equally as depressed as some might say the South African rand is if you look at a chart. But then you look at the GDP figures that came out overnight, where you had nearly 3 times more annualized growth against the expectations. Inflation's ticking higher. Let's look at the Bank of Japan and what it signals. But in terms of the central banks you mentioned, more likely that the Australian central bank will move rather than the Indonesian central bank or even the Reserve Bank of New Zealand.
Yeah, well, I do know that the Bank of Japan has also been at the center of market sentiment quite a few times, particularly when they started increasing interest rates. And I'm wondering if the economic growth in the fourth quarter, that surprise to the upside, maybe then supports this trajectory that the Bank of Japan is on of increasing interest rates, that really they're not going to break anything at this point.
Absolutely. And now the Bank of Japan have got another reason to start pulling the trigger. One thing that happened with the Japanese yen volatility last year was that there was a lack of guidance or narrative on what direction the Bank of Japan would move and when it would change that direction for higher interest rates. Now the economic data is pointing out that Japanese central bank are in every position now to be raising interest rates. They won't want to do it too fast because, again, you haven't seen high interest rate policy or even interest rate policy much above zero for our lifetimes. If you're in Europe right now in Generation Z, you would look at the interest rate policy being very low throughout that time. But for us as millennials, actually, we've never seen or known interest rates at a normal level in Japan. So this is definitely trending now into uncharted territory. But the economic data continues to suggest that Japanese central bank interest rates can go up. The case of the Japanese yen, which is still very, very weak against all currencies, is that it can increase interest rates. And the economic data is also signaling the same.
Well, talking about territory, of course, we know that in a number of places there's been a fight for that, particularly Russia and Ukraine with the war that is still ongoing. Of course, President Donald Trump is now trying to, basically prepare for peace talks in Saudi Arabia for the end, hopefully, of the Russia-Ukraine war. But Europe is not so happy because it has been excluded. I do note that there have been talks. Has anything stood out for you in terms of that interaction?
Yes, I would say, in fact, just being European myself, although I'm from the United Kingdom, I still consider myself as European, that the EU's been left completely in the cold. It's not been part of these talks at all. It's been watching the headlines in the same way that me and you in our respective careers watch these headlines. And I think that's why you've seen a lot of weekend news about the potential or the call for an army of Europe and so forth. I think that's a little bit more scary than it needs to be, but it does signal that the European markets and the European community doesn't feel like it's participating in a crisis that's impacted the EU economy more than any regional economy. Of course, globally, we all know of the inflation shock, the largest we've seen in decades. However, when it comes to the economic data and the macro fundamentals, it's impacted the European Union more than any other economy. So, of course, the EU Commission, the Eurozone, and in some ways the European Central Bank are going to be watching what happens very closely. And they would want to at least be on the table, even if they're not the ones dictating where the cards are going to fall.
Well, it's quite interesting, Jameel, because with the talks that the European leaders are having, that's also, as you mentioned, including on defense and security. And we have seen, as a result of that, the defense companies, the defense stocks, actually, the share prices surging today. I haven't seen that much action in those defense stocks since the height of the Israel-Hamas war. Just talk to me about that, but also how much upside then we could see in those stocks if the Russia-Ukraine war came to an end.
Well, I would say it looks like a knee-jerk reaction, to be honest, following what was Zelensky's comments this weekend about the need for an army of Europe, if I use that term correctly, which some EU leaders might see as being something that's formidable. Others are going to stand away from that. And I think investors are reacting more to that than the reality of something like that maybe taking place. Ultimately, though, should there be a ceasefire or a peace or hopeful conclusion to this conflict now, which is very closely heading on to 3 years, I would in fact actually expect for that sentiment to weaken quite fast. Should things unfortunately escalate, which I don't think is going to be the case, and the market definitely isn't leaning in that direction either, then yes, we could see more upside, but I don't think it's going to be sustainable or meaningful.
All right. Well, as we wrap up the conversation, Jameel, anything else that you are looking to as we kick off the week that could impact some of your decisions there in the economic landscape?
Well, I think we need to be watching the UK economic data right now, because if you're looking at some of the momentum for the UK economy in 2025, it suggests that some of the hopes that were coming into play in 2024 was somewhat of a false start. And in fact, the change of the government that took place and so forth didn't provide a kickstart, which is what many in the market were thinking. You look at the inflation data that's expected this week and the UK jobs data that's also expected this week, that's going to play a large role into the Bank of England, which should be continuing to cut interest rates over 2025. But it might be very concerned about the potential for a trade war to be taking place between the EU and the US. Even though the UK isn't the one that's been in the firing line so far, you never know which way this administration is going to hit. Elsewhere, we're going to be keeping a very close eye on gold prices because it looks like a very one-sided trade right now, with many thinking it's just a matter of time before it potentially hits $3,000. But I would hang my hats on some of the concerns over the Fed not cutting US interest rates further anytime soon, potentially some ease in the geopolitical concerns. And the matter of the fact that by some maybe small miracle, the US economy continues to fire on all cylinders, no matter how pessimistic the expectations are for a downturn. The reality is that the data's not spelling out any downturn anytime soon. And I think that the dollar can remain somewhat more, I would say, strong historically.
All right. Well, King Dollar there. There you have it. Thank you so much for your time, Jameel. That was a chief analyst at Online Trading Brokerage GTC, Jameel Ahmad, with this week's economic week ahead.